Hello, 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 and welcome to the show. Jazz hands. We're just talking. It's showtime. That's what it tells me up here, Craig. So, hey, everybody, we've got Stan with us. SCHD Stan for the super fantastic, spectacular 200th episode. Why is it I don't. It's just a number. It's really just a number. But you know what? We'll take it. Hey, how you been, man?
Good, and congratulations on 200. You say it's just a number, but that is something, man. That is you should be proud. That's amazing. A lot of people can't make it this far, and you've done it, man. Good for you.
No, what does it mean? I don't know. Now I can quit. I can ride off into that dusty digital sunset, huh?
Yeah,
But
man.
oh my God, look at all these people already. This is so fun. You know what? Honestly, if I could drop everything else, I would keep the live because it's just so easy. Just sit here and share thoughts and just talk off the cuff. And
I enjoy it, man. I try to tune in every Sunday when you come on if I can. If I'm not busy, I even have it on in the background while I'm doing other things, like earphones on. I'm listening. Same thing with Ryan's show on Friday night. Like I look forward to it, and I really enjoy the folks and people just talking about investing and the like-minded, the dividend style investing. There's a mix of everything else in there too. So it's a good group. It's really fun, and you do a great job of going through the news, and you have such a good knowledge base of like everything. You know a little bit about everything, and like you can actually speak intelligently about a lot of things, and it makes it really unique. It's not just a stock show. Like there's more to it. So good job.
Good. Well, I try. It's a little strange at times, but it's for you and everyone watching, it's not always easy, but you want to be yourself. And I remember Aswath the Motorin stuck in my head. He said one of the greatest sins an educator, I'm not saying I'm an educator, but he said one of the greatest sins an educator can make is to be boring. So I figure, hey, at least just don't be boring. But with that, hello, everybody. Let me just get some of these people's up here. Got Rick. Hello, Rick, and William Black, and Eddie. Yes, I did. Actually, ladies and gentlemen, boys and girls, breaking news. I did sell 105 shares of Zoetis at $129 and 100 shares of Nike at 63. So I took a loss on both of those, but there was a deadline coming up. I'm able to make, I almost said unable. I am able to make a private equity investment in the company that I work for. And, I talked about that, I think last week with some of you guys. So, it was a little bittersweet and a little hard because I want to hold on and keep getting, a higher price. But you know what? Hey, it could be upwards of a 6x return in 3 to 4 to 5 years, depending on when they sell. Because the company that bought us, what they do is they're not like a vulture capital firm, right? So what they do is they buy, build, and sell. So they're going to try and grow us as big as they can and then sell us. And I've talked with them and they said, yeah, we don't want to hold. We want to have a plan to exit. So I now can be invested in that plan to exit. And I actually now have ownership in the business. And Craig, I was thinking like, do I really want to sell these stocks? And I was like, dude, what business do I know more than the one I've been in for almost 27 years? And I see this company every single day from the inside. There's probably no company on the planet that I'm more intimate with than this one. So why the hell wouldn't I invest in it?
That's really cool, Russ. And if you have good people around you, good management, yeah, exactly. What better investment is there? And then you can feel really good about what you're doing, and like every bit of good quality work you put out there is helping you in two ways like that, right? Like that's amazing. In multiple ways. That's cool.
We'll see if, they sometimes promise the moon, but if my expectations, I'm keeping it low. If I can double it we'll call it 5 years, I'll be happy. I'm only throwing 20K into it. So I know, right? Yeah. That's amazing. And I recognize the saying that only 20K, but you know what? If it can at least double in 4 years, I'll be happy. And, yeah, all right, Chris, thank you, man. Turbo, looks forward to the live streams. Yeah, I appreciate that. I was telling Craig sometimes, I'm like, dude, it's weird. It's a really weird thing. I'm sitting in this room by myself talking, and well, now I can hear you, but normally it's just I'm talking to a camera, and it's if I stop talking, it's just like dead silent. So it's a weird thing, but Yeah. Anyway, Turbo, Chris, Janice. Thank you, Janice. And what did you think of the Super Bowl, Craig?
Yeah, it was a little bit of a letdown.
It was a snooze fest.
It was a little boring. Yeah. If it was one of my teams, I'd be happy to watch defense. But yeah, if I'm watching two teams I'm not that interested. I want to see some fireworks, man. You want to see some action. So that, especially the first half, was, oh man, that was rough.
That's what I kept telling my kids. I'm like, there's one group of people that are absolutely loving this, and it's the Seahawks fans. They could care less if they won 3-0. They'd be over the moon. But for all the rest of us, garbage.
If that was the Eagles like punishing somebody, I would be all into it. I'd be like, this is the greatest game I've ever seen. But like when they killed the Chiefs last year. Yeah, that was fun.
Yeah. Look at this. I'm going to get these going quick. So, Dresh, like putting your names on the screen. It's fun. Duffy J, I don't think we've talked. I know you bring some people here. The mighty Kevin Burgess. What's up, man? Thank you. Kevin. There you go. Yeah. And what have you guys been buying? Like, there's so much news we could talk about. I wanted to bring Craig on, and we're going to talk about. Oh, hold on, real quick here. I was just texting with Kelly Green. She blew through Chicago and had a layover for a couple hours. Didn't get to hang out, but we're gonna. I'll ask her about it. We're gonna in a couple weeks. I'll be in Florida at the end of the month for the Indy 500. The Indy 500 race in Tampa. No, the IndyCar race in Tampa. So I'm going to that. But yeah, you guys, just like Trevon did, share what you're buying. ADP and Microsoft. I was just reading about Microsoft, and hey, they're breaking news. Elvis says Craig is switching to the Dolphins. We didn't know that, Craig. Please tell why.
Yeah, Elvis can dream. Elvis is my guy on X. We talk all the time. Good guy. He lives down here, South Florida, by me, and he's a Dolphins fan. We feel bad for him. Sorry, he's trying to bring me down with him, but you can't do it.
Hey, I would love to see the Dolphins do well. New coaching staff coming in. Yeah, it
would help the area a lot. I would love it if they did well. So I am cheering for them, just not over my Eagles now.
Dresh, I'm telling all you guys, when I sell stuff, I actually started looking at positions that I had in the past, and oh my God, I have such a list. I'll probably do it, turn it into a video. But yes, Zoetis, everybody get ready. 12 to 16 months, it's probably going to double in share price. Same goes for Nike. But Vasco, listen to the Zoetis earnings call. It was great. Stock fell 10%. Minutes later grew 9%. And you know what that is, man? A rule of thumb, and I don't know if you ever do this, Craig, they say that you should not buy or sell until after the earnings call, or at least until after the first couple analyst questions, because then you get a real good flavor. And that's why we'll see sometimes the stock will be way down and then it'll flip, or it'll be way up and it'll flip down because of what management is saying on the call.
Yeah, I'll tell you from experience, it's a gamble if you buy before the earnings call. Even before the earnings call, like I tried it with Nike. Like I'm like, oh, maybe things, they weren't doing well. And I thought this was before the big drop, right? The recent drop. I'm like, let me buy a few shares. I had some money. I'm like, let me buy a few shares, and because maybe they'll say something good and they'll pop. Complete opposite. I mean, it must have lost 10, 12%. And like, just like that, money gone. I'm like, I'm not doing that. I haven't done it again since. That's hard. That's hard, man. Not fun.
Yeah. So everybody, do yourself a favor. Do like Janice, and yes, not financial advice. Keep your eye on Zoetis and Nike, because they are sure to do that. Yeah, Lucas, I'm going to get very intimate with my cow. I've been intimate. I'm not going to get. It's been intimate. And the puke bowl. Yep. There she is, Lisa. What's up? I returned the favor from last week.
I watch Lisa's shows a lot. Very good educational stuff she shares.
I was writing the newsletter today when I got home from work and had her on. So yes, I worked this morning, everybody, and we're almost caught up. So while I'm looking through these, we're caught up. What now? I'll build off of Adam, which also has a YouTube. He also has a YouTube channel. We don't want to speak about him like he's a robot or something, but Adam, yes, he's rotating into dividends, and apparently the great rotation is underway with the market, right? I was telling Craig, it's the first thing we talked about. I was like, dude, I looked and I put in the newsletter, since the calendar flipped to January 1, SCHD has outperformed SCHG by almost 25%, which is just absolutely bonkers. So you think it's going to continue?
Yeah, I mean, it's these things tend to go that way, but we really don't know. It could be things could turn around quickly. It could continue all year. It could continue for 5 years. We don't know. That is a good question. Like, do you like the cool thing is that a lot of us are already in these stocks and we're getting to benefit from kind of years of being down. So right now I'm kind of just like sitting back and enjoying the work. Like we took a lot of crap for the last few years and now we're kind of sitting back and enjoying. You can sit there and say, yeah, that was good. So yeah, it's really good, but it can change. And it's a good question. Like, do you jump in now if you weren't already in these stocks? Do you keep adding a lot now? Do you find the ones that haven't jumped yet or haven't started seeing a lot of action yet that are going to catch up? It's tough. Like, do you chase what's performing right now, or do you still try to find things that are undervalued? And do we even know if these things are still undervalued? Like, is SCHD like peaked out and it's going to kind of go sideways for the rest of the year because it's already up 15% to start the year? Is it going to keep going or is it going to go sideways? Right? Like, we just don't know. But I am enjoying it.
Yeah, new all-time highs, man. It's funny that you say that because that's the honest answer. I think that's the correct answer is, again, I always say it's all blue in the face. The future is unknown and unknowable. So therefore, everybody else, whenever you hear an opinion, I always just preface it with saying, now this is a wild ass guess, but ... And yeah, it's just, and that's, again, what makes life so freaking fun and interesting. Most of the time fun is that we don't know what's going to happen. Nobody's seen this movie before. So yeah. Anyway, did I see Nike's being investigated for discrimination against white people? I did see that. Where's it going to, what's going to happen with it? I don't know. That's for the people doing the investigating to figure out. And yeah, I guess I'll just have exposure to them in mutual funds and ETFs right now. So yeah. What do you think about this, Craig? Do you have any thought about Vasco not having access to SCHD in Portugal?
Yeah, I wish I had more. I get asked about that a lot, like European investors getting into SCHD. And I wish I had answers. I really don't know enough about Europe to help, not being there. But like I know some people, I think it's restricted by the country, but I know if you use interactive brokers, I have friends in the Middle East that use interactive brokers, but I mean, there's a lot of freedom there as far as like what you can invest in. Like the guy lives in Dubai, my friend, and no taxes. Like it's crazy. And they can use that and they can buy in any country, wherever. But I don't know if you can look into interactive brokers, maybe, but yeah, I wish I could help more.
You can use AI. Just ask Gemini.
There you go. Exactly.
I'd love to go back to Dubai. Have you ever been to Dubai?
No, I haven't. I would love to go though.
Yeah, I was in Dubai in 1998. I was in Dubai twice, and then they have a sister city a little bit down the coast called Jabal Ali. And yeah, and it looked nothing like today, where they have is it the Burj Khalifa Tower? Isn't that in Dubai? I think so. Yeah. None of that was there, dude. They're fuzzy memories, but when I went to Dubai, that was the first time I had ever been into an IKEA. So I know, weird, right? The first time I go into a Swedish store is in Dubai. But yeah, it was fun. Those were my Navy days, everybody. So yeah, I went there against my will. I didn't have a say so. I wasn't hanging out with Captain, telling him I wanted to check out Dubai. Yeah, my daughter owns Caterpillar. So, Craig, I had a conversation with my wife, my lovely wife, and she said, I told you to buy more Caterpillar. This is what happened. I bought 4 shares of Caterpillar in the mid 90s, during the COVID collapse, right? So the mid $90 range. And she said, you should buy a lot more. They're always going to be needed, I think. And I was like, what do you know? So I rode that up to about $120-ish a share, and I sold those 4 shares. And I thought I was pretty slick because I made like a $30-ish profit. Right. Yeah, now we're pushing $800 a share. On the bright side, my daughter, when they got the stimmy funds, I don't know what you did with your kids' stimulus check money, but
I don't know why. But, well,
Oh, is it because you're Canadian?
I have no idea. I was Canadian. I have a green card now, but I didn't at that time. I was a visa holder. So that was probably part of it. You're not giving out money to immigrants. People don't like that.
Damn snowbirds.
I'm an immigrant.
Yeah. So we took their stimulus funds, and I don't remember how much it was, a couple thousand. I think we got 2 different checks, and I invested it for them. I opened up a custodial account. I hand selected, if I remember right, like 10 to 12 stocks and said, here, you can pick from these which ones you want to buy. And yeah, my one daughter picked Caterpillar. We bought 4 shares for her. And it's crazy because she's up, I don't know, 200. Her cost basis is like $125.
Yeah, that's more because I have some at $207. I'm looking at it now. I'm up 272%. So I think she's like pushing
350%, I think is what she's up. And I'm like, man. Yeah. And of course I'm showing my wife, she's like, I told you, just put a whole bunch of money in a Caterpillar and don't sell it. And I was like,
wow. Yeah. What was her thesis though? Like, what was she thinking? Like, where'd that come from?
So she grew up in Peoria, one of the reasons, and she's not here, but she grew up in Peoria, Illinois, and Caterpillar is from Peoria, Illinois. So it's real big in Peoria. And she took the kids a few times to the Caterpillar Museum. It's a cool place. There's a bunch of hands-on things that you can do there. And yeah, so that was one of the reasons. And then we're cat people. They like cats. So you see how deep the analysis goes. But she did say, she said, every time I see things being built or they're doing road construction, I always see Caterpillar machines that are always there. So
don't let anybody tell you that dividend growth stocks can't kill it like that, man. It's amazing. The starting yield now is 0.78%. You know, when I bought it, my yield on cost is almost 3%. Right. Yeah, and that's locked in. That's mine.
Yeah. That's a great point.
Right.
That the yield on cost, if you guys don't know, is you take the current dividend, the dollar amount, and you divide that into your share price, right? What your cost basis is, and that's your yield on cost.
And it's going up 7% last year, and it's up the last 10. It's about 7. They're pretty steady with 7% for the last 10 years. They've averaged 7, and last year they did 7. So
that means my daughter's probably pushing 5%. I haven't even looked at what her probably because it hurts.
33 straight years of dividend increases. Like, come on.
Yeah, it's awesome. Because it's a sore spot with me because I didn't. Look at this. Lisa said over 100K, no stimulus. So I wonder because interesting. No, but for the kids, I don't think we got it, but I'm pretty sure I was making over 100K 5 years ago. So, but my kids got it. I don't know. Yeah. I'm not going to get a knock at the door now, but
yeah, it's not happening for me.
Yeah, same thing, Lisa. And I just was like, yeah, we're doing okay. So we invested that, and her biggest dividend payer is Home Depot. Very nice. Oh, dude, Dan, what's up, man? What happened to Dan? People were asking me about you, Dan. Where did you go? Did you take a break from your channel? I know it's tempting, believe me.
Yeah. I asked him about that. I said, where have you been, man? I miss you. And he said he'd just been working. He's been putting in work, like on stocks. And I mean, him and what's his buddy's name that he does Capital Mindset?
Yeah.
What is his name? Dan, type it in there. I can't remember his name, but that guy knows his stuff, man. He is really knowledgeable. You know what I'm talking about, Russ?
Yeah, I can't think of his name.
No, Fabio? Something I can't remember. Fabio. Is it Fabio?
No, I don't think so. Dan will put it in.
Yeah. But Capital Mindset is his channel. Very knowledgeable. Like he goes deep. Yeah, Fabio, I think.
Yeah, he has a sub channel in Capital Mindset Discord. Look at this. Danny11 says it's great to see you here. And even when he does not invest in SCHD, your investment mentality is amazing. Yeah, I'll drink to that. I'll second that, Danny11.
If I had a drink, I'd cheers you too. But cup of nothing.
Cheers. I got tea. Pretend like you're in a movie.
There's a little coffee in there. Cheers. It's my wife's cup.
My kids love doing that when we're watching a show and they do that. They're like, there's nothing in there. I can tell they're not really drinking. Oh, you're right. Steve said it is Fabio. I think you're right. Yeah.
It didn't sound right when I said it, but yeah, it is.
So guys, ask a question for him, whatever you want. I mean, we're here for you, right? We're here hanging out, having some fun. I could talk football for the rest of the time, but that would alienate 98% of the people watching. Look at that. There you go, Dan. I was waiting for it. That Ford is carrying your bag in SCHD. I'm in shambles. Yeah, it's funny.
He ripped on it hard when SCHD added Ford, but it's been doing well. I think. I
ripped on it too. I didn't like it. I didn't like it, but somebody that looks like you told me, "Hey, you just got to trust the process." And I said, "Okay." Well, my thought was simple. I was like, I'm not going to sell SCHD because they added Ford. It's just going to be
1%, 1% or less of the fund is Ford.
Yeah.
And I always just said, it's like just using it for the dividend, man. It's just using it. If they cut the dividend, if anything changes, it's gone. So I'm fine with it. But it ended up working out pretty good. Took some time, but it worked.
And it's got Nexstar Media.
Like Merck, and it's got a little your old friend still hanging out.
Yeah, my old friend that I sold in the 160s, the 180s, and now we're pushing 230. No, it's in the 240s, right? Because of the Tegna. Trump said we got to get the deal done with Nexstar and Tegna to, I don't know, help combat fake news or something. Shareholders don't care. They got Trump's stamp of approval. But yeah, it's just funny. I did. I texted Ryan. I was like, I said, dude, this is unreal. I held the damn thing for, I was buying it in the 130s and 140s at one point and going pretty heavy into it. And then, you know what? But hey, I
did trade and was happy to trade. Like I got in because you talked about it all the time. I gave it a look. And I remember your thesis was kind of like around the elections, right? Like it's going to do well from all the advertising during the elections. So as soon as that cycle ended, I sold it and I did pretty good. And I did wonder, I never ended up asking you, but I did wonder why you kept it after that. But I guess it was still doing well, but then it went down and then it came back up, right?
Yeah. For me, it was always going to be a long-term hold. And here's the beautiful part is that as I started studying it more and looking at trends, it just really looked like a big melting ice cube to me because people are going to streaming, like it or not. Linear television is just not what it used to be. And hey, companies that are melting ice cubes can do very good. They can spin off cash for many, many years, but I just wanted to be invested in something that had a really high return on capital employed and was growing like ding, 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 Zoetis. So I got off of the rocket ship called Nexstar right before it took off. And I put that money into Zoetis, which turned out to be a sinking ship. So yeah, I stepped off the rocket ship and onto the sinking ship. So that was a fun one. And now I locked in a lot.
Anyone who's picking individual stocks goes through that. Like if you don't hear it, they're just not telling you. Like everyone goes through that. Everyone's made like a terrible switch up like that, or just invested in something terrible. Like we all have. We shouldn't feel shame about it. We should talk about it and learn from it, right? And I've learned that, it's really hard, and that's why I love ETFs so much. They protect you from, not completely, but a lot of that. And they'll bounce back. Like as long as it's a solid, diversified, or a solid theme, it's going to end up coming back because it's always going to find winners in there. The winners are going to move to the top in the market cap weighted ones. And you won't have to worry about trying to choose the winners yourself because you're just going to own them in that strategy, in that theme, that given theme. So ETFs are just fantastic ways to invest. And like really, most people don't need anything more than that. And if you can hold a handful of solid ETFs, 1 or 2 or 3, 4, 5, and then add some, pick and choose some stock that you really know something about, you can do really well. And like if you just kept starting over, that's what I would do. I still have a lot of stocks. I was thinking about it. I'm like, it does work for me though, because I think I have a lot of the stocks that I have the most of, the individual stocks, are dividend stocks. And one thing I don't hear a lot of people talk about, other than maybe like Jason Faber, is like if you hold dividend stocks, it doesn't hurt you to hold as much, to hold a lot of them, because then a dividend cut or a problem affects you it's a very minimal, right? So if you have like 30, 40, you're just like collecting income from all these guys. The dividends are growing. It's like you still got to screen them, make sure they're all good companies, and you can follow them. But it's almost an easy button, because if you see stress on their dividend and they talk about cutting, or they do cut, you can just get rid of it and buy something else. So it's really interesting, and it helps a lot to have a lot of them. It doesn't hurt you. So any thoughts on that?
Well, for me, that's why I shifted, and I finally hit the 85% ETFs and 15%
Right.
individual stocks,
Yeah, you're doing
because
it. You're living it.
I
Yeah.
can't tell you how many times, and I know, and it's funny doing this. There's so many people out there that it's just so easy to beat the market. Like, you know what, and I understand some people want the income and they could care less about beating the market. But when I looked on the total return basis for a lot of my individual stock picks, they did not beat the S&P 500 on a
Right.
total return basis. So that was with dividends reinvested. And I just started thinking, like, what am I doing? It's just,
Yeah.
there's this giant flashing easy button here. And I'm like, nope, don't want to hit that. I want to do it this way. And it's funny, actually, I just made the move because, you know, I told you that our company was acquired. We were part of a group, and this capital firm bought us and brought us out of the group to bring us under with them. So we left the group. So effectively, it's like our how do you call 401k provider changed, because we went from the groups to now where we're at here. So we went from Hancock to JP Morgan, and you know, they told us about rolling over the 401k. I was about to do it, and then I just had a thought. I'm driving one day. I'm like, wait a minute, why am I putting it in JP Morgan? Why don't I just divert it into Schwab? Because the two things that I was going to hold it into was S&P 500. And those of you watching in a 401k, you're extremely limited on what you can put your money into. So there was one S&P 500 fund. I was doing the bulk of it in that. And then it was an extended market fund, or it's essentially the S&P 500. So it's 501 on. It would be like taking VTI, right? You take VTI and you split it up by pulling out the 500 and then the rest of it. So I was like, Vanguard has exactly those funds. So I'm just going to I'm thinking about it. Now, what's your opinion on that? Would you go and it's a big chunk of money. Would you put it just in the VTI, because that has obviously everything, or would you do S&P 500 and it's essentially the mid and small caps and micro caps is the X to 500.
Yeah, I've essentially done the same thing, because I didn't have the VTI option to do. I've done the same thing. I have an S&P fund, and then I have a small cap, and I have a mid cap. So you know what, is not that much difference at the end of the day. You know, don't kill yourself over it. Like, the most important thing is get it invested, and don't worry about it. Like, we get into the weeds sometimes a little too much. You know, you can nitpick here and there. I sort of like having it separate, because you can then kind of play with the dials and say, you know, I think still you're timing and you're guessing, but you can also say, oh, look, like small caps are doing really well. Like, let that run. And then when it kind of starts slowing down, because small caps can really have some bad times, you can say, you know what, I'm going to sell this, put it in the S&P, all back in the S&P. You know, same thing with mid caps. Like, I think I might do that. Like, finally they're waking up, but I've underperformed the S&P. I wish I would have just had in the S&P the whole time. But now maybe I've kind of learned that, hey, now when these things start cooling off, maybe I'll sell them and just put it all in the S&P and make it really easy. But it's just, you know, it's just making up little differences here and there. At the end, playing with it too much, you might hurt yourself. So yeah, the VTI is a nice easy button to do it all.
Yeah, that's the easiest. Let me get through a few of these before we go run through some news, because I'm getting behind here in the comments. Do you have any idea about what the TSII Rex shares are? I've never even heard of that.
Option shares. Oh no, I don't know that one. I'm sure it's some sort of high income covered call.
If anyone has a thought, please put it in the chat.
It's like a times tour.
I don't know. Yeah. Here we've had a couple about the reconstitution. I know you like to play the guessing game. For me, I'm just like, hey, whatever it is, it'll be. You know, I don't even think about it.
Yeah, I love it. I love to get into the details just because I'm a nerd about SEHD and I love it. But at the end of the day, I trust the process long term. Like I think people get way too worked up about it, and then I hear people making this. This is important because I hear people saying, "I'm going to decide whether I invest more or less in SEHD based on the reconstitution." If you're that good at picking stocks and you can know a year ahead of time the stocks they pick are good or bad, just invest on your own if you're that good. Like pick them yourself, and then keep SEC and pick the ones that you like. Just add it on top. Like, you know what I mean? Like it's kind of I don't know. It's a little much just to do. And some people are really good. Well, then maybe just pick stocks. You know, if you're that good. So,
do you know what's funny, dude? Speaking of validation, I remember it must have been a year ago talking with you, and you were saying how everybody's upset because now SCHD is so high in energy. There's too much exposure to energy. Energy sucks. And then all of a sudden, energy is the hottest thing on the planet right now. And oh, look at that. SCHD is just crushing it because, and like you said, nobody knows.
You just don't know. And then people are going to get upset if they pull some out now because it's doing well. And they're like, oh, now that it's finally doing well, you're going to pull it and change it. I'm not buying anymore. Like it's over, you know? But you know what? Energy might go back. Like, look, there's a lot of things happen. I don't like to predict it, but more money, more oil coming out of Venezuela could eventually lower the prices, which will cause these stocks to come down. So we might have just captured the top, sold some of it off, and you know, off into the sunset, like things are even better. So who knows? Or maybe it keeps going. And I don't even know if SHG is going to cut out or not. But I will know soon because I do go through it this month and I make predictions. And it's based on the filters. Like I recreate the filters. I use Seeking Alpha for that. And it does a pretty good job. I do a decent job of figuring what's coming in and out. So, and I'll post that usually at the end of March. Beginning of March, end of February. So follow me on X for that stuff.
Yeah. We'll look forward to that. You have a quick answer for Elvis here. Can we beat the March 25 payout of 24.88 cents?
I think
high
so.
Share price.
I think it's looking good, man. I keep track of all the dividend increases. There's already been 32, and 28 of them are going to help with Q1. The rest won't affect until Q2. So it's almost guaranteed it's going to be higher than last year because I think it's going to be higher than December. And that's way higher than last year was. Last year's like, what do you said, 24 cents?
Yeah.
Well, December was 27. So I think it's going to be in, above 27 possibly. I haven't done the math yet, which I will do and post too. But yeah, I think it's a good chance we're looking at a 27.
Have you shared what percentage of your portfolio is in SCHD? I don't think
I don't usually because I don't like sharing my total net portfolio worth. But it's a good chunk, but it's probably less than people think.
Fair enough. Thoughts on J&J? My thoughts are that I can't believe how high it's run up. And I know they still have pending litigation with the talc powder. I know they tried to do the Texas two-step by creating an entity that they could, like a trust that they could put a couple billies into it and then everyone can sue the hell out of that thing and then it'll fold. But they ruled against it. I know they spun off Kenvue, which has that. So I think the way it goes is that Kenvue maintains exposure to international litigation for the talcum powder, but J&J is exposed to the U.S., so they're not shielded like some people would think. For me, I think a lot of people forgot about that. I haven't heard anything about it in a while, so. But again, I can't believe how high it's run up. And
right.
You know what, Danny? I mean, if you're uncomfortable with how crazy high it's gone and you don't mind taking the tax hit if it's in a taxable account, I don't know. But yeah, I mean, hey, all you guys, you also have AI. Like it's not perfect, but it's an opinion. You can take it with a grain of salt and just, get an opinion.
And some of these, like a lot of them, like we talk about all the time, like we look back at the stocks we sold, most of them are doing better than they were when we sold them. So always consider that. I really like the coffee can approach. If you got a good company, buy it, forget it, and just let it go. Because you'll usually end up doing well. Like there's always this stuff that you're like, oh, this company is on the way to dying. But if it's not dying, good company, hold on.
Right. Turbo and Ryan, both very rare. They buy a company that doesn't pay dividends. I think Ryan is actually 100%. I think he is completely, he won't even consider it if they don't. if they don't pay a dividend. Lucas wanted to know, is there any of my coworkers doing the same thing? I believe so. A lot of them don't understand it. Yeah, exactly. They think some people think their money's going to be taken and but you know what? That's fine. That's fine. Hey, we all have the same opportunity. I'll look at Duffy's only non ETF is Main Street Capital. That's one of mine. Interesting. I did see a stat that U.S. stocks are 40% more cheap or 40% more expensive than the rest of the world now. So look at this. Stan Craig has dividends. Nice. We didn't know that was your acronym. Here we go. He said it. Eric said it's a weekly paying ETF.
You know what it is? I looked at it. It's a Tesla. It's like a 2 times Tesla weekly.
Dude, that's short term for me.
I hope I got that right. I'm pretty sure.
You know what, man? I would not chase the dividends on that. You need to know how much of it is return of capital. And what's the total return, Ben? I've never seen it, but if you're ever in doubt, look up the total return, meaning if one were to invest with distributions reinvested, that gives you a pretty good clue because some of these high income covered call funds with dividends reinvested are negative or flat. So guys, that's because
there's no shortcuts. There's no shortcuts. These things are shortcuts. Like, sure, you can do well with some of them, but it's not worth it. You're going to end up good chance you get hurt, and it's just not worth putting good money into a lot of these. If Tesla does well, it will do well. So maybe just invest in Tesla. Like, Tesla's probably going to do better with. It's risky too because it goes up and down. But if you believe in it, you've done your work. What's wrong with just investing in Tesla? Like, you're paying. They're giving you a lot of your own money back, and you're paying an expense ratio for the privilege. Like, just really be careful. I'm not saying they're all bad. Some of these are good, but
that's my litmus test. That is my litmus test. I will do a total return usually from inception. I like going to inception, and TSLY pays crazy high yields. Tesla, no dividend yield, nothing. And Tesla beats the pants off of it with these crazy high yields. So that should tell you something that they are giving you a lot of your own money back and the fund is not growing. They're not reinvesting back into that. They're just talk about a melting ice cube. And yeah, Tux Cat said it perfectly that you have to remember when you're buying an ETF, you are buying the methodology. And then Tux corrected me or not corrected, but added on. Yes, that KMB Kimberly Clark is buying Kenview. So, but still, J&J is exposed, and if I'm wrong, then somebody correct me. But from what I remember, J&J is exposed to it's either U.S. or North America to the talcum powder lawsuits, and that could go. That could be yucky. But I don't know what happened with that, man. I haven't. A lot of you guys, I love it. If they don't pay a dividend, they don't even exist. And my only caveat to that, and this is where we all take our own path, but there are a lot of opportunities that I passed up because they either didn't pay a dividend or the dividend was microscopically small. And then I look a few years down the line and it would have done exceptionally well. So that's where I think, for me at least, everybody do you.
Yeah, I buy stocks without dividends. Lots of stocks without dividends.
Yeah, and that's why Hero Incorporated is one of my best. That's one of my best performers.
Oh yeah,
doesn't pay a dividend.
Great. Yeah, I bought a little of that too. It's been good.
Yeah, and you know what? That's one of my coffee can stocks. I said unless something fundamentally breaks with this company, I will. Because studying like Amazon, they'll show those charts saying how Amazon, they took it had out of 70% drawdown 2 or 3 times over a 10-year period, and I'm just like, I'm going to do the same thing with Hero. Where's it going to go? I don't know. But as long as the fundamental thesis for investing is not broken, I'm just going to stiff it out and stick it out. I think is what I wanted to say. But all right. I think I'll do some news here because I'm caught up with this, with Williams. Oh, you guys are chatting. All right, good. All right, you ready? Take a sip. I'm going to try and go. There's a lot of news here. So I'm going to try and run through this as quick as possible for good old Simply Safe dividends. And we're going to start with I'm going to do like this. Maybe I'll hide us. I'm going to hide us.
Yeah. Next era energy. Oh, no, you're starting from the bottom down.
Yeah. So it's a lot. Everybody watching, feel free to pause the video. I don't want to be stuck here all day. This is probably going to be the fastest I've ever done this, but T-Row, 2.4% raise. Don't know Avista, 0.5%. Gilead, 3.8%. That's their 10th straight year. I told you it's me quick. ADP. I saw Trevon's buying ADP, I think. Get a downgrade to 90. Very safe. HP. Yeah, their CEO departed to run PayPal. So I don't know why he decided to do that, but PayPal's struggling. HP's struggling. Maybe it's the CEO at this point. I don't know. Tractor Supply, 4% dividend raise. Oracle, another dividend downgrade. They've been, I think this is their second or third that Simply Safe's hit them with. So their dividend is, don't buy Oracle for the dividend is what they're saying. Could be a big risk. Got Phillips 66 with a 6% dividend raise. Cisco has fallen a bit. I can't believe how high they are. There's another one. Yours truly sold them in the $50 range.
Yeah, me too.
2.4% dividend raise. Equinix, data center REIT, 10%. And look at that. Down there, it shows they're potentially reasonably valued. I got a lot. I'm looking at my sidebar here. There's a lot left. Canadian company, Manulife.
Yeah, I got some of that in my Canadian portfolio. Yeah.
There you go. Actually, our John Hancock, it has the two logos. It says Manulife. There's a bar and then John Hancock. So that was interesting. Here we go. Unilever, 9%. Huge dividend raise for Unilever. CME, 4% raise. Again, if anybody wants to look at these and read it, you're going to have to pause the video. Exelon, this is who I used to pay, or I still do. ComEd here in Chicago, an Exelon company. Raised their dividend 5%. Oneok, they got an outlook refresh. Not going to get into that. Marzetti's, I looked at Marzetti some time ago. Barbecue sauce deal trims their flexibility. I forget what else they make, but Marzetti is a food company. Prologis, I work at Prologis buildings all the time, 6% dividend raise. And they always seem, look at that. They were under $100 when I was looking maybe a year ago or over the summer. Nice. Missed that one. TC Energy. Isn't this Canadian?
Yeah.
No. I thought so. Yeah. 3% dividend raise. We're almost there. I'm out of breath. Hazy, I have no idea what this specialized finance company is, but they raised their dividend 1.2%. So congratulations on the token dividend raise, Hazy. And Magna, 2% dividend raise.
Canadian.
Yeah, you're right. It is. And the last one, NextEra, 10% raise, which a lot of you like NextEra, 31st consecutive year of dividend growth. So I got to put us on there. Oh, I removed you.
One that I own. It's a good one.
I'll get this. Hey, there we go. Oh, holy cow.
Nice. What's up?
Why didn't I do that before? I don't know. Half the time I'm just kind of flailing about trying to get this right, but look at that.
Nice.
All right. Well, take a sip of the water there. Look at Turbo sold Unilever.
Got through there. Good. Fast. Nice work.
That was a land speed record called Guinness. I could use a Guinness. I like Guinness. I only know Exelon is an Alzheimer's drug. I did not know that, but no, here in Chicago, my bill, it's ComEd. So Exelon bought ComEd. It'll say all the trucks you see them, the ComEd trucks, an Exelon company. Yeah, that can happen with some foreign companies like Unilever, and it kind of turns me off. How do you feel about that if you were to own a Unilever? And I know we talked about this before with ADRs, American Depository Receipts. Does it matter to you at all?
You actually get when you do your taxes, you get a credit back for those foreign companies. So it's not as bad as you think. You do have to pay it, but then you get it back. So it's a bit of a pain, and it ends up being the same. You get taxed on, I think, don't quote me, but look into it. But pretty sure it ends up being the same thing you'd normally be taxed on the dividend. You just get it back later.
And I think somebody put this in there, and we should know we're not tax professionals, but I think if you hold it in a tax deferred account, then it doesn't. You can't claim the foreign tax credit.
Yeah.
I think is what that is, the foreign tax credit.
Yeah.
Look at this. Adam's throwing out there that T Rowe only uses 45% of free cash flow or something to pay nice dividends. Problem is they have been consistently losing customers. Yeah, they have been beaten down, haven't they? Because they were on a watch list. I remember the Dividend Talk guys talking about T Rowe. Oh, geez, they're down to $93. Yeah, they're
a solid company, like good margins, and they do well. But the problem is that they're mutual fund company basically. So with a lot of folks moving to ETFs, they're kind of like you'd say all the time, a melting ice cube. It seems like, but yeah.
Just peeking here. Yeah, I don't know, man. It's margins are compressing, sales have flattened. It looks like they could potentially be struggling there. I wouldn't. Look at this, Adam. Moved you to the big screen now that my wife took a nap. You guys are huge. And Adam, I don't even know how we were small before, quite honestly. I might have been doing, nope, see? I don't know what I'm doing half the time. Okay. We'll roll with it. Let's see what William said. TD. Hey, there's another one I sold because of the whole, what happened with that scandal with the money laundering? Wasn't it Chinese money laundering?
It was something. It was annoying. Like it happened, but I said at the time, I'm like, it's such a good company. It'll get through this. I mean, this is probably an opportunity. I remember telling you that. And it was like, it worked out. Like, it was a lot of these big companies, they work that stuff out, right? Little lawsuits, they pay $1 million here, $1 billion here, and then move on. It's all good. It's crazy. Yeah,
it was a big fine. They said that they were not going to be able to expand in the United States for 3 or 5 years or something. And
some of that is probably still affecting them. So maybe they'll get even better. It's crazy.
So I sold because I didn't want to be involved with a company that was being investigated for money laundering.
I don't blame it at all. I remember thinking, I'm glad I'm not holding it anymore because I used to hold it individually, but I have it in a big ETF, a Dividend ETF in Canada that holds all the big boys. I'm like, one of the top holdings. I'm like, why am I doing this? And then when that happened, I was like, see, that was the right move. I don't have to lose any sleep over this at all. And I still benefited when they rebounded. So perfect. ETFs, gotta love them.
Yeah, like Trevon says, he doesn't mind paying taxes for great companies. The growth over time is the key. Yeah, I think so. And what a champagne problem to have is, oh no, I have to pay taxes on a big gain. Would you rather pay taxes on a big gain or tax loss harvest?
Yeah, it's like, would you rather make more money or less money? Like, you're going to say more. Like, I want more money. You're going to get taxed more, sure, but it's still more money.
Somebody just tuning in now, it's like, this is the hard-hitting analysis that we tackle. Would you rather make more money or less money?
Yeah, that's our level of intelligence over here.
Turbo. You know what, Turbo? Yeah, I've seen the Goldman Sachs, said the panic meter or something was at max levels, and I'm like, every time I see this, it's just noise. I'm like, but nobody knows what's going to happen. I don't know. The market could crash 50% or it could go up another 50% a year from now, and at this point, I wouldn't be surprised. But you know what, man? It's just having that. I think one thing I've learned, and I don't know about your thought, is just having a plan and sticking to it, not trying to. Too many people, I think, want to jump on what has been working and go all in on almost the peak of what has been working, and then wait, and then like, so watch, if SCHD keeps going up and up and up, people you're going to flood back into that, and then something else is going to work.
I really think that's worth a discussion right now. Is like, the seasons of investing, like the cycles. Now the environment is good for a value stock, value ETF like SCHD. It's really going well, but you can't. So now if you look at a 1 year period, it's beating SPY, it's beating the Qs, it's beating the covered called index funds, QQQI, SPY-I, GPQI. It's beating almost every ETF. So now does someone jump on and say, oh, look what won last year. I need to buy this, right? And then eventually the cycle changes, and then something else will be winning. And then what? You move to that. You're going to keep chasing? Like, are we chasing last year's winner? Or are you preparing yourself for the future and just buying good stocks, good ETFs, and holding them through these cycles? And hopefully when they're good, you can realize that it's time to buy more when they're down. Like, don't get scared when they're down. If you have conviction in it, buy more. And maybe buy less when it's up a lot. Like, honestly, right now I'm buying less SCHD I'm buying SEHG right now because it's down 10% from 52-week highs. You know, and people say like, well, are you giving up on SEHG? No, no way. I would love for it to dip, but I only have so much money to invest every month. Why not invest in the thing that I see having the most opportunity, whether it's the stock that I'm named after or not? It's not what it's about. I want to make the most money I can. When I see the good opportunity, I'm going to go for it. And if that happens to be in the G and not the D, that's what I'm going to do. And I saw somebody ask, like Adam K asked about why he asked about my portfolio, how much percentage, and it wasn't to just find out like what it was. He's like, he followed up and said, if someone needs a better picture of like what you're doing, and that's a good question. So at my age, I'm 50 now, so my goal is to kind of have 50% in dividend stocks and 50% in growth, like roughly speaking, right? So and SVG is the big chunk of that dividends, not all of it. It's a good portion of it, but there's also like DGRO and there's FDVB. And then like we talked about, maybe 40 or so other individual dividend paying stocks as well, right? And then most of the growth is in like Mag 7, S&P 500 and SEHG. And I'm sure I'm missing some, but SMH, I've got a lot of that too. So I do have a nice balance. And in the past, it was actually more growth. I just started buying more dividend stocks when I started picking stocks on my own when I was about 42 or so when I started picking stocks. So before that, it was all pretty much S&P 500 and that sort of thing.
Same here, man. I was in my very late 30s when I got into, I just decided I'm going to beat the market. I'm going to be like the Wolf of Wall Street. Yeah. And I started with penny stocks, and it's been a whole process. But when you were talking, I thought of an interview I heard with Cullen Roche, who wrote The Perfect Portfolio. And the way he summed it up is it's almost counterintuitive that you'll know you have a perfect portfolio when it's not perfect, meaning that people think their perfect portfolio is every single thing in it is performing perfectly. Right. And it's almost the exact opposite, where you're diversified enough where you always have something that is lagging and underperforming the market. And you look and you think like, why do I own this turd? Like why do I even have this in here? I really don't want to own it. But then all of a sudden, then that turd starts, boom, like now that's the hot thing. And then what was performing great is not doing so well. So it's like you always have, like you said, the investing seasons, all these cycles. And it's just an interesting thought to
so good to see right now. Like I'm really enjoying seeing this cycle happen because I've been talking about it for the last 3 years, as people would say, like, why do you invest in this thing that's doing nothing? You know? And I said, just hold on, just wait. You'll see.
You virtually slapped them. You won't. You're Canadian, man. You guys are the nicest people ever. Yeah. It's I don't know why that is. That's the joke down here, how nice the Canadians are.
Somewhat true stereotype.
And then, but they give us hockey, where it's the one sport where they encourage fighting. So I don't know. It seems to not make sense.
Like to fight. We like to fight and then make friends after, right? It's a different kind of fight. Hockey mentality.
Did you see that?
Let's go. I remember me and the boys, we'd go out and have always a few hockey players. Let's go find someone to fight, and then we can make friends after and have a beer. Okay.
That is Canadian culture.
Man, that's the culture.
That's there. I just saw the hockey game between U.S. and Canada, where they had 3 fights in the first 9 seconds or something.
Oh, there's so many guys play together too. Like they're all, they all know each other.
Yeah, wasn't it the Kachuk brothers? I think both fought. No, I can't remember now.
Wouldn't they be on the same side? I don't know.
2 brothers. No, they fought one after the other.
Oh, okay.
Yeah, they're on the same side, but I think it was the Kachuks. Yeah, it's got to be Matt Kachuk. Anyway, William with a little color on TD. He said the money laundering, the fine they paid was a slap on the wrist, and they cleaned up their depository policies while they were under a microscope. So, hey, good. And I even said, if I'm wrong, hopefully I am wrong, and people make money that stay invested, and they did, and I didn't. When you were talking, Danny said, "Amen." I guess amen.
Amen or amen? Amen.
It could be both.
Hey, man.
Nice. Elvis, look at this. Oh, you guys are leaving. Dude, this time just flies. Look at that. Dan says you can't go wrong rotating on SCHD and SCHD on rotation of the markets.
Such a great combination.
Yeah, my daughters, I actually because I thought they needed more growth. So here you go. Now I'm affecting them. I had them split even between SCHG and D. And maybe about last summer, I ended up selling the D and putting it all into G.
Yeah.
So, but it's nothing crazy. It's not like a massive life-changing amount of money. But once again, I'm just like, damn it. It keeps happening. That whatever I sell is guaranteed to go up, and whatever I put it in.
I love that style of like picking a few, like even if you just did SCHD and SCHG and putting in a 50-50 pie and putting your same amount every month, and it's and then having the balance at 50, and it's always going to go into the one that's more undervalued because it's gone below 50. So the more of that money is going to go into the one that's better for you in the long run. Like,
you know, people are just, they're spooked. They're spooked by AI. Dude, we see the AI killers now where it hit the craziest thing I'm reading about. This company that, I don't know, 3 months ago did karaoke machines, and now they caused Schwab to lose 10% of their market cap in a day or something. I'm like, what is going on? Then there's another company that's gonna apparently make trucking and drivers and obsolete. So all the C.H. Robinson and Landstar, they all just fell. It's weird times, man. It's weird.
Think of the beauty of owning SCHG. Like SCHG filters for growth, like SCHD filters for dividends, for different sustainability. They look for things that are growing. So what's going to happen? You're going to end up the winners are going to be in SCHG. So you can buy that on a discount now because of all this noise, and the eventual winners are going to be in there and move up to the top. And if the ones that are winning now stay winning, you've got them. Like it's so easy. It's beautiful.
Yeah, Alan's doing but and then I see this as kids also are just 100% SCHG. But they also have, again, Caterpillar, they have Walmart, so they have some of these that they've done very well on.
Yeah. But I think sometimes people think there's only one way to invest. There's so many different paths up the mountain, man. Like you don't have to pick one style. You can go with this style, that style, like mix it up. Yeah, so many ways to do it.
Yeah, I don't know if you've listened to the Compound and Friends with Josh Brown and Michael Batnick, but I love the one. Josh Brown came up with an acronym called HALO, Heavy Assets, Light Obsolescence, meaning that people now are looking for these companies that PepsiCo. He says PepsiCo's growing revenue at like 7%, but the stock's up 15% in a couple of weeks. Like, what is the deal? Well, I think people are just kind of afraid, and they're looking for those safety things like Claude and Gemini. They're not going to give you Doritos and Pepsi. Claude and Gemini aren't going to replace Caterpillar. So people are looking for these things that they know that the next wave of AI is probably only going to help make them more efficient, and it's not going to make them obsolete overnight.
Right. I think you said that too. Like the type of companies in a fund like SCHD are eventually going to really benefit from AI because they're making real products. They're real businesses that have been around for a long time, and they're going to all be able to increase their margins because things are going to be cheaper for them. So like they end up benefiting from this too.
Yeah. Well, we'll see. Who knows?
Yeah.
I mean, I don't know. Maybe OpenAI is going to start giving us. We'll be able to have a printer and it'll shoot us out Pepsi and Doritos and make us all fat and unhealthy. I don't know. Here, we'll end with Dan saying, he says, Craig, nothing is better than buying a stock or ETF and getting shit for it and being right eventually. Take it in and attack your haters. I don't know what the Paul reference is. Is that that must be between you guys?
It's Paul from Everything Money. That's right. He called SHD a scam. He invested in it too, but they did it for clicks. And he wants me to. Paul got not into it. We discussed it. I said, I still remember when you called out SHD and called it a scam. He's like, what? I never said that. And he was like, show me the video. And I'm like, oh, really? I have a screen cap. But they had changed it after. I think he knew that. So he's like, well, show me the video. And he knew they had changed it. I'm just guessing. But I showed and then Dan came in and threw an even bigger one up. It was
beautiful. Beautiful, Dan.
I would not go any harder. I'm like, I'm not going hard. It's not the Jedi way. Revenge is not the Jedi way. It's not my way.
Dan did that with something else where I think it was Dan, when I talked with you, Dan, you said you screenshotted something, or maybe it was with like Meet Kevin or Jeremy or something. But yeah, Dan Dan had screenshots about like things they took down or something they said.
Right.
I love it, man. That's why it's beautiful. I love that people do that, because screw it. If you're going to go and say something and get people to invest, yeah, he changed the thumbnail. Nice.
Yeah.
All right. Well, we keep it at an hour and we're about there. So this is fun. I love this. I'm so happy that all you guys, there he is. Dan keeps keep and hang on to those receipts, Dan. You never know when you're going to need them. I love it. Take receipts of my channel too. I don't care. You know,
call us out. Call me out.
Yeah, do it. Oh, here, last one. Gil, he says he has almost 200 SHD shares and 65 shares of Vici. Our thoughts. Well, I think we gave quite a bit of thoughts on SEHD. So, Gil, we've been blabbering about it for a while. And yeah, so again, now we're out of it. I'm out of breath, out of time. So, Craig, thanks so much for swinging by. Appreciate it. I'll have you on for number 300.
Anytime, man. Thanks a lot. Congratulations again on making it to 200.
Yeah. So with that, I'm going to take us off, and I'm going to take us out with good old Pee Wee Herman. So thanks, everybody. We'll see you next time. Appreciate it.